All right, welcome to Coffee with Markus. This is episode 143, and in today's episode, we are going to talk about rescue missions for the wheel. You see, the wheel strategy is a great strategy with a very high winning percentage, and it's all fun and games as long as it works, but sometimes trades get in trouble. And a lot of traders don't know how to fly a rescue mission, how to salvage this trade. So that's what we're going to talk about today. Does that sound good? Okay, then let's get started. This show is about real money and real trades. I'll show you the trading strategies that I personally trade, the tools that I use to trade my own accounts, and we will talk about the right mindset of a trader. Now, talking about mindset, I'm going to show you how to create SRC profits. And SRC stands for systematic, repeatable, and consistent, because that is the key to long-term success in the markets. So, if you are sick of all the hype and empty promises, and you want to learn trading strategies that actually work, then click on like right now and let's get started. All right, now this will be a really exciting show because we are talking about rescue missions, and I know that this has been on your mind. Is it possible to rescue a trade of the wheel strategy? Because the wheel strategy, it's just a great strategy. I love it. You know, I'm trading it a lot because it has an incredibly high winning percentage. And it's really all fun and games as long as it works. But sometimes trades get in trouble, especially after last week and also today. Many of you and me, I am in quite a few tech stocks, and today tech stocks get a beating. So this is where many traders don't know how to fly a rescue mission, how to salvage trades. So today I want to show you the following three things. First of all, what is a rescue mission? I would also like to talk about number two, how to fly a rescue mission, and number three, when exactly should you do this? So let's get started. Now, before we do, let me not forget Happy International Women's Day today. So, congratulations, happy day to all the women in the world. Okay, now let's talk about wheel strategy tips, how to fly rescue missions. Now, just very briefly, if you are brand new to this channel and you say, I have absolutely no clue what you're talking about, let me give you a 60-second overview of what this wheel strategy is and why I am loving it so much. So there's actually three steps to the wheel strategy. Number one is you're selling put options and you collect premium. And I'm doing the same mistake again about wildly capitalizing and non-capitalizing, but you get the idea. Okay, now depending on where the stock is on expiration day, you may or may not get assigned. So what does it mean? It means that if the stock is closing below your strike price on expiration day, you will own the shares. If that is the case, so when you are assigned, you sell calls and collect more premium. And if you're not getting assigned, then you just go back to step number one. Easy enough. So it's an easy to understand strategy, and it's also very, very lucrative if done correctly. Now, here is the problem. So the problem starts if when you are assigned, and after assignment, right? So this is where the problem. Let me just do this. What if you can't get enough premium for the calls? And here's what I'm looking for. When selling calls, I want to see at least 30% annualized. And if I don't get at least 30% annualized, this is when I don't want to do this. Now, the other important thing is here, so don't sell below the assigned strike price. And I'll show you several examples here in just a moment. So this is the problem, and this is when, okay, the question is, do we need to fly a rescue mission? Now, before we talk about do we need to fly a rescue mission, let's talk about what is it when I talk about these rescue missions. Okay, so and I'm putting them in quotation marks so that you know that this is not an official trading term. This is just something I name it this way. for trades that are in trouble. So here is how these rescue mission works. So you sell more puts, you sell more put options below the assigned strike price, right? And therefore, the advantage of this is, first of all, you collect more premium. And that's what we're doing with this strategy. After all, this is a premium generating strategy. And here is the other advantage. If you are getting assigned, you lower your cost basis. So let me explain to you exactly what that means. And I want to show a very specific example. What example should we take? Let's take the example of Ride. And I'm going to share my iPad here. So Ride is a stock that I am in right now. And let me just go to my handy dandy iPad here and show you what happened. So I got assigned at a strike price of $21.50. And as you can see right now, Ride is trading at $16.50. So a possible idea here is that we are selling, and I'm trying to make my math easy for me. So we would sell more puts at $11.50. And I don't even know if the strike price of $11.50 exists. I just want to explain to you the basic principle here. So this is where we're selling the $11.50 put and we would collect more premium. Now, if we are getting assigned, then we are owning shares at $21.50. So let's just say that we would own 100 shares at $21.50. And if we get assigned, we would own another 100 shares at $11.50. So this means that if we take the average of these two, so $21.50 plus $11.50 would be, you know what? Let's just not screw around and let's use the handy dandy calculator just in case, because doing math on live videos is not my strong suit. Just be absolutely honest. So this is 33. And if we are dividing it by 2, so 33 divided by 2 means that our average price per share is $16.50. Now, this is where we are lowering our so-called cost basis, and therefore we are making it easier to get out of the trade. Is this making sense thus far? Because if you're getting assigned, and there's my handy dandy calculator, you lower your cost basis, and therefore it might be easier to get out of the trade. Because then if you look at this example here, in this case, Ride would not have to go all the way up to $21.50 again. If we would only go up to $16.50, right, then we are already break even, and then we can start making profits. Making sense? Okay. So there are questions. When should you fly a rescue mission? And we're getting to this. Let me just walk you through this step by step, because this is what I said. So the 3 ways that we do this is, number 1, what is a rescue mission? Now, number 2, how do you fly a rescue mission? And then we'll talk about when do you do this. So how do you fly a rescue mission? And this is actually super easy and super simple, because all you need to do here is for this rescue mission to sell more puts. Okay, so let's just be a little bit more specific here, but there's really not too much to it. So you just sell puts below the assigned strike. Now I recommend that you are not sell puts. There we go. So I recommend that you sell the same amount of puts that you have sold previously, or more if you have the buying power. But the most important thing here is, for me at least, to follow the wheel calculator. Okay, so as you know, this is a tool that I like to use to know exactly whether the expected reward is worth the risk. Oops, there we go. So what do I mean by this? Well, when it comes to the wheel calculator, I want to make at least 30% annualized. And if I can't make at least 30% annualized, then it would not make sense for me at all. So, but you see, it's super easy. Now, here is the most important question. And this is what somebody just asked here. When should you do this, right? Because this is super, super important. Now, let me just, first of all, talk about the concept, and then I will show you the trades that I'm currently in. And yeah, it's red. It looks like a bloodbath. It is not pretty today. It hasn't been pretty last week, and it's not pretty today. I know, you know me. I'm showing you my live account. I'm not hiding it today and say, oh, well, today I have some technical problems and I cannot log into my account, so I cannot show you what's going on. No, I'll show you what's happening, because that's what this channel is all about, real money and real trades. And again, it's all fun and games if the markets want to give us money, but sometimes you have tough days, you have a tough week like this. And this is why I'm here for you, because I want to help you through these tough days and through these tough weeks by showing you what I personally do, and I hope that it helps you in your trading. Okay, so when should you do this? Okay, so there's a few keys, important things. First of all, you only do this only if you can't get enough premium for the calls. Again, think about it this way. You are already assigned, right? And we talked about it. So you're selling put options. You are assigned. And when you are assigned, you want to sell calls and collect more premium. So as long as you can still get enough premium for the calls, don't worry about it. And here's another important thing. Wait. Super important. Don't do it too early. And by it, I mean don't fly rescue missions too early. Because when you do this, you're losing buying power, right? Because you need to keep your powder dry. And by powder, we mean margin and buying power. So when exactly do you do this? So here is a rule of thumb that I like to do. Only consider this, and by this I mean flying rescue missions, if the stock went down at least 30% from your assigned price. So let me show you some very specific examples here right now. I want to show you the trades that I'm in right now. And the first one that I'm in is Apple. So let's talk about Apple here. And oh boy, Apple gets a beating today. So the strike price that I was assigned at is 133. And right now, as you can see, Apple is trading at around 117. So let's use our magic ruler here and see between 133 and where we are right now, the 117. I hope that you can see it, otherwise I'm reading it to you. It is only down 12%. Only down 12%. So let's just make sure examples. So we start with the first example, and the example is Apple. And Apple is down, what did I say? 13%, 16%? Can't remember. I don't remember a darn thing these days. 12%. There we go. Around 12%. So Apple is down 12%. So what does this mean? This means no rescue mission for Apple just yet. Keep your powder dry. And this is where wait until Apple bounces back a little bit. I mean, wait until Apple finds a direction. So here, for me, this is where I want to be down at least 30%. Otherwise, you're doing it too early, I believe. I mean, again, this is what I do. You do whatever you want. You're an adult, right? That's a beautiful thing. You can do whatever you want. You can eat ice cream for breakfast. That's a cool thing about being an adult. But here is what I do, and I hope that this helps you. So let's take a look at another trade, GDXJ. So how are we doing on GDXJ? This is a trade where I'm in Last week I was able to sell calls. I got assigned at 48. We are measuring it right now. We are at around 45. So I'm going down here to 45. And right now we are down 8.6%. I'm being generous and I say that we will be down here. So down 9%. So this means for me also no rescue mission. Right? So it's really super important that you keep your powder dry. Let me just see. Can we? There's this arrow. Okay, so don't fly them too early. This is one of the biggest mistakes that traders do. And yes, sometimes it sucks. I'll show you my account here in just a moment. But I want to talk about the third trade that I'm in, which is Ride. And Ride, let's just take a look at this. Ride, I got assigned at 21.50. And right now, we are down to 16.22. So this here is, it's a little bit more. It's 24%. Right, so with the 24%, we can start thinking. Okay, so this is where we are down 24%. And this, again, for me, is no rescue mission yet. But this is where I would say we can start thinking about it. Now, the important thing is really, you got to make sure that you're not getting enough premium. Now, let me show you my account, and let me show you exactly of what is happening here. And as you can see, right now there's Apple down $13,000. Oh dear Lord, right? I mean, GDXJ down $1,500 for the day, down $6,500. Right, down $2,600 down for the day. So that's almost $25,000. Now keep in mind, this here is a $250,000 cash account, $500,000 in buying power. And I know that this here looks so ugly, right? Because it's a larger account. But if you think about it, Apple is down $13,000. So, and if you take the $13,000 based on the buying power, it is down, what, 2.6%. So $13,000 based on a $500,000 account is 2.6%. Let's talk about the $25,000. So the $25,000 based on the $500,000 account, it's only 5%. So for me, it's not a big deal. This is not really a huge account for me, a big account. I mean, the bigger accounts that I've been trading were around 750,000, 650,000, 750,000. So this were, imagine, 3 times as much. So when you see that you have an open P&L of more than $100,000, right, this is when you might start getting nervous. But so here, not really a big deal at all. Now, I did enter Snap today, and Snap right now is down. I'm a little bit surprised that it kept plummeting. So it is down. Well, we can talk about this a little bit later here. So the important thing is, and this is what I want to get back to, because here about rescue missions, right? So don't do it too early. This is the number one mistake that I see, you are having paper hands, right? And you have heard the expression paper hands versus diamond hands. So if you see that you're down, see in this account, if you're down like 5% on a trade, that should not freak you out. And if it does, then you made a mistake with the stock selection. And this is where I talked about stock selection in the previous video. I'll link to it in the description. So by all means, take a look at this. Now, a few things that are really important before I take a look at your questions here. This is absolutely important. Hold on. Let me share my screen here. So absolutely important. And I'm going to make this in yellow. And here it is. You can't rescue every trade. And I will give you some very specific examples here. And I want to make this actually in red because it is that important. See, some traders who are trading the wheel strategy are getting super comfortable and they say, oh my gosh, Markus, you rescued the TQQQ trade, and you might have seen this, and you might have seen me rescuing trades, and you might have seen me down, and then after I'm being down for a couple of days or a couple of weeks or even a couple of months, I'm all the way up again, which is fantastic. And this is where you might say, you know what, I can probably rescue every trade. That should not be a problem at all. Well, here is what I have for you. But you always rescue trades. Well, you see, if you entered into a stupid trade, you gotta cut it loose or huddle. Hold on for dear life. And I want to show you some very specific examples of trades that were sent to me where people said, okay, so how do I rescue this? So let me show you the first trade here. TQQQ, because we talked about it this morning. And TQQQ, this is where a trader got in right here at 104. And so the trade here is, okay, sold 104 put, right up there. And this is where I'm saying, what the heck were you thinking? I mean, this is where probably you got a little bit too greedy. And yes, you're now in a whole world of pain. And you know what? Rightfully so. Because this will help you to avoid these mistakes next time. So what are we always talking about? Where should you sell puts? You should sell puts at where you see some support. And oops, not showing my chart. So where do you see support? Right here. Well, I see some support at around 84. So support is around 84, not at 104. So super important here. And if you had sold the 84 put, you would be just fine. Now let me show you a couple of other trades where I say, you know what, really, why the heck? WKHS. So I heard from a trader who sold right here, 38. So sold the 38 put. And this is where I say, what the heck were you thinking? Where on this chart do you see support? I don't know about you, but I see way more support at around the 20 mark. Right here, right? So this is where we have support at around 20. And if you would have sold a 20 put on Workhorse, you would be just fine. So this is where some traders get blinded. They really get blinded by the premium that you can get. And don't do this. One of the key things is you gotta sell at major support and resistance. And I did a video on this, on how to find major support and resistance. I'll link to it in the description. It's really how to find support for these kind of trades. So super important here. Let me show another one. mRNA. So I heard from a trader who sold Moderna at 170. Sold the 170 put. Okay. So what the heck? What the heck were you thinking? If you're in a world of pain, rightfully so. Because take a look at this. Where do we see support? Maybe here at around 110. Okay. So support at 110. And you just got greedy. I mean, let's face it. And if you look yourself in the mirror and be honest, you probably know that you were greedy when you entered this trade. Okay, so let's just do a very few important rules. So 5 stocks. 5 stocks not to sell puts on when trading the wheel. So first of all, number 1, don't do it on Reddit stocks. What are Reddit stocks? Reddit stocks are GME, AMC, BlackBerry, is it BB? I believe so. Bed Bath & Beyond, right? What else? SLV, for example. All of these are Reddit stocks, and I put this in quotation marks. And if you have been trading this and you're in a world of pain, this is where you probably can rescue every trade. And this is where, as I said earlier, so sometimes all you can do here, I'll bring this back for you just so that you have a visual, right? I mean, you got to cut it loose and say, okay, I'll learn from my mistake and I got to make the money back. Or you hold on for dear life and you might be in this trade for a long, long time. And at some point you might have to cut it loose anyhow. Because honestly, if you traded GME and if you sold puts at, I don't know, 280, I don't know, or you traded AMC, right? And you sold puts at 12 or 14 and you got assigned here right now, or you sold BBBY, Bed Bath and Beyond, right? And you sold it at 40. I mean, there's not much you can do. This is where you can't rescue this. Okay, so we got to talk about this now. The next one is stocks with earnings before expiration. Before expiration of your puts, don't do this, right? I mean, and if you did it, you made a mistake, so learn from your mistake, and you might have to take a loss here. The important thing is you gotta follow the rules. If you don't follow the rules, it'll be tough, right? What else? Stocks with a so-called phase 3 clinical trial. And this is especially pharmaceutical stocks. I mean, because they can go crazy. Let me give you an example here. An example here is SRPT. So SRPT, right? I mean, this was probably a stock where you thought, oh my gosh, I will be safe. But if you did a little bit of research, you saw that a clinical trial result were due and it didn't go well, as you can see. So this stock plummeted from 170 to 90. And will this ever recover? I don't know. This is tough. So if they had a failed clinical trial, they might not recover. And they might recover a little bit, but you might have to cut it loose. So let's write this down here so that you have an example. SRPT is a perfect example. So what is the next one? The next stock that you shouldn't sell is crazy stocks. And let me show you a few examples of crazy stocks that even popped up today on the scanner. I mean, this is where the scanner is just that. The scanner is a scanner, and one of the stocks that popped up a little bit earlier, I believe it's no longer there, but it was APHA, APHA. Oops, let me go back to this one. Let me just show you. So this is one of the stocks that you might have seen popping up earlier. And if you look at APHA, you see that this is a stock that went from, what, $5 to $32. You see it all the way up here. So this is clearly a crazy stock. And then there's a lot of premium in there. Yeah, so don't trade something like this. This is absolutely crazy. Number 5, stocks with premiums that are too good to be true. Because if it is too good to be true, which would be the stocks above, then it usually is. So this would be the stocks above, and also the so-called leveraged, the leveraged ETFs. And leveraged ETFs are ETFs that in the description have 2x, 3x, or something like this. Let me show you an example. So an example here on the scanner, we see, for example, BRZU, Direction Daily Brazil Bull, 3x shares. See this? Here's another one, JNUC, 3x shares. Here's a biotech bull, 3x shares. Here's a gold miners index, 3x shares, right? So stay away from these 3x. Here's a Direction Daily FTSE China bull, 3x shares, right? I would stay away from those one in general, because I just don't think it is a good idea to trade these, because they might not be able to rescue at all. So before I look at your questions, let me give you a brief summary, because I think it's important, and then I'll show you more example. So summary number 1. Yes, you can fly rescue missions. And they make sense, right? But you need to make sure that you don't trade stupid stocks. And this stupid stocks, I know it's a harsh word, but see above, okay? Don't make these mistakes. The also important thing is have a plan before you sell puts. So let me show you very specifically. I'll give you a plan right now. Here we go. So today I traded Snap. So, and what I did with Snap is that I traded a strike price of 49. But you see, this is where I already know when and where I will fly my rescue mission. Because as you can see, there is more support right here at around, I want to say 37.50. Let me just mark this here. Yeah. So more support at 38. So this would be a possible level for a rescue mission. Now, it doesn't really qualify for my at least 30% down, but you get the idea, right? If you're looking at 30% down, we can fly rescue missions all the way down here because let's see, how much is 49 times 30%? So that would be $15. So $15 would be at around 34. Yeah, so 34 is your 30% down. And this is where we can start flying rescue missions. Look at this. What else? So on ride, absolutely. So do I have a level in mind where on ride I will fly rescue missions? Absolutely. And this level is here. Now, are we at this level yet? No. But here is my support level. When I got into this trade, I knew that we had a support level at around 12 to 13. And this would be a level where I'm comfortable flying rescue missions. So my point is, this is why I'm showing this to you, is I know where to fly rescue missions before I'm selling puts. Let's talk about Apple. So Apple is another one here. Let's do this really quick. So when I got into this Apple trade, I already knew that I would fly a rescue mission somewhere around here at around 108. So this is where here, support at 108, and this would be perfect for a rescue mission. This is also approximately my 30% down at this point. You get the idea, right? So super important that you do have a plan before you sell puts. So what I mean by this, that you know, is where's the next level? Where's the next support level? Because the next support level is where you would fly a rescue mission. So, and this is the last thing that I want to mention here before I look at your questions and we go through some very specific examples here. Don't panic. Don't panic, and don't start flying rescue missions too early. You gotta keep your powder dry. And if you right now see your account and your account looks like this and you see, oh my gosh, it's overall down 46%. That's not even 10%. That's not even 10%. And if you can't stand a drawdown, then this trading strategy might not be for you, which is okay. There's plenty of other trading strategies where you might experience a lower drawdown. But honestly, I mean, based on my experience and the results that I want to achieve, for me, I am fine on any account. It doesn't matter what I'm trading, whether I'm trading the Power X strategy, the wheel strategy, whatever I trade. I'm fine with the drawdown of 20%. Because if I am trying to make 30% per year, for me, that is okay. And you see, I was on track to make probably 50 or 60%. So risk is part of our deal as traders. And the reward is always a function of the risk. The more risk you're willing to take, the higher the reward. The less risk, the less reward. And again, if this is where you look at your account and you say, oh my gosh, right? I mean, consider trading another trading strategy that has a lower drawdown, but therefore also a lower reward. So this is where if you want to have a drawdown of maybe 10% per year, think about returns of possibly 20% per year. Or if you want to have a drawdown of 5%, if you don't want to have a drawdown at all, consider putting it into a savings account. Then you never have a drawdown. Anyhow, good. So let's talk about some of the questions, because I knew that this today was a topic where we have a lot of questions coming in. And this is where I want to make sure that I address as many as I can. So John says, if you're selling puts to bring down your cost basis, it's best to do them with a closer expiration date. Yes, I would do it always with 1 to maximum 2 weeks of expiration. So right now, today is March 8th. So I would choose the expiration of March 12th, or is that the right expiration? Yeah, or March 19th. So these are the next 2 expirations. Absolutely. Great question. Or great comment here. Good. Okay. So GK says, if you think a stock will continue to go up, such as Win, we should not ride a call. Well, if you're riding a call, you're limiting the level that the stock can go into. And this is why, as John just asked, I would go for rather short-term, short fuses. Because let's just take a look at this here together. Why not, right? I mean, if we going to take a look at Win, so let's say you're having Win here right now, right? And right now you see that it is trading already at 133. So the question is, by the end of the week, will it trade above 145? And this is where you could sell calls that expire by the end of the week and possibly collect premium. Now, if Win would shoot up, it looks like Win has found some resistance here at around 140, right? So if you say, well, you know what, I'm selling at 145, and over the next 4 days, it's very unlikely that Win goes above 145, you could collect some premium here. Anyhow, good question. Okay, Renee says, hello from Australia. Hello and good evening. It's probably pretty late for you right now. Thanks for joining us. Is it what, midnight or something like this? Friend referred your show to me and I love it. Great to have you here. Okay, good. All right, so let's see. What other? Joe is also from Australia and France right now. In France, is it 10 o'clock at night? Hope that you're enjoying a good glass of wine. Heard that the French have really good wine. I'm not a wine drinker, so don't know. Good. So let's see, what else do we have? And yeah, the Eagle Owl says the GDXJ48 is not in trouble. It is not. I mean, none of the stocks that I have in my portfolio right now are in trouble. Not at all. So Twin Screw, wheel is working here. Realized 77% annualized return today. Good for you. Good for you. So one of the questions that Teresa has here is people are also asking if you should double down when you sell puts like you did with TQQQ. No, it was an honest mistake. And here's why. Let me just show you how these mistakes are happening. So it's a great question. And I want to jump here on the screen. For example, Apple, I sold 8 options, right? And I sold them at 133. Now, Apple today popped up on the scanner. And let's just say right now I would sell at the 108 level, right? And this is where you see if I do this at the 108 level, it would actually tell me to trade more options. Right now it says 9. So what happened, Teresa, because what happened to me when doubling down, my account was growing up. So it was from 500,000 to 600,000 and the cost basis went much lower. So I believe it went from 150 to 100. So this would be the equivalent here from, let's say, 130 to like 90. And you see, this is when it gives me more options to trade. So when I did this, I don't, and again, I'm going from memory here. I don't think that this was intentional, what I did there. So let's just see. I think it's 111. Okay, anyhow, we'll get back to this. So this is where, Teresa, great question. And I probably accidentally sold more option and I wasn't planning to do this. So this is where we go back. This is why I know that this question came up. And I want to say, here we go. Okay, let's go back to the screen. So how to fly your rescue mission, same amount or slightly more, right? So if you sold 8, you can do 9. It's probably best to go with the same amount of options. I mean, that's what I'm doing. And again, honest mistake when I did this. Teresa, making sense? Okay. Good. Okay. Timothy says, I'm down badly in mining and I think it's a health stock. Well, take a look at this. Is this a stock that you wanted to own in the first place, or did you get greedy and blinded by premium? If you don't want to own it, think about cutting it loose or hold on for dear life for a long time. Anyhow. So Tulia says 30% annualized based on what capital? On the buying power. On the buying power. So 30% on the buying power of 500,000 would mean 60% on the actual cash of $250,000. So Tulio, great question. Absolutely always. I mean, at least that's how I do it on buying power. Okay. Good. So Duke says, running rescue mission on Apple today, 2 puts, 110 to lower my basis. I think you went a little bit early. I did trade Apple today, but here's why I traded Apple today. Let me show you. I did trade another put on Apple today, but the only reason why I did it is because it did come up here as a position. And I liked it. You see, based on everything that I saw, we have our virtual boardroom right now with our mastermind members. So we talked about it this morning. And out of everything that I saw, I even wrote it down here. Let me just quickly see. We liked Cree, ATVI, Snap, and Apple. These are the best. Cree had a little bit crazy bid and ask spreads, and ATVI, that trade was gone. It was a trade in the open, and if you didn't catch it in the open. So Apple was still a really, really good trade for me. And this is why I sold, let's see, the 113 for 70 cents. Now this here, as you can see, I clearly count this as a separate position. So let me just make sure that I'm having this here correctly. So I right now in my account, I have 5 positions. I have Ride, Apple, GDXJ, all 3 of them have been assigned. And then today I entered another position. It's not a rescue mission. So very important. This is not a rescue mission. It's another trade because out of all the possibilities here, I like this the best. And then also Snap, trade Snap, I've shown you that. Anyhow, good question. Okay. So, let's see. B-Bond says, blurry for anybody else? I hope not. I hope not, because my bandwidth should be pretty good here. Okay. Good. Why not sell puts, more puts below and also sell calls above to collect both ways? Well, here's the deal. I would only sell puts below if, let's go back here. If I can't make enough money, let's see. Why should I do this? When should I do this? Nah, can't find it. It's there. So I would only do it if I can't get enough premium on the calls. So this is why TS, it wouldn't make sense for me to sell calls. So this one I resort to selling puts. Okay. Ali, if there's no more capital available to sell more puts, what should we do? Your host. I mean, how could this happen? How could this happen? You should not be assigned in all 5 stocks. If you do, you traded way too aggressively. So this means that probably you have to wire in more money or huddle, hold on for dear life and hope that it bounces back. So this is why I'm saying keep your powder dry. I mean, don't do these rescue missions too early. And if you have been assigned in 5 stocks, I think you were a little bit too greedy. And I mean, again, I don't know your trade, so maybe you were, maybe you weren't. Maybe it's just the way how your account is structured. But this is what I found for most traders, that they got a little bit too greedy here. Anyhow, yep. So lower cost basis. Yes. When should you fly a rescue mission? We talked about this. Tia said just sold a 14 on my right. I think it's too early. I think it's too early. So I would do it probably around 12 or 13. Ali says, why don't you recommend to average down with the Power X strategy if it's working? Well, with the Power X strategy, I've short trades, swing trades, right? Completely different strategy. So here, with the Power X strategy, I'm taking advantage of short moves, 5 to 15 days, maybe 20 days. And therefore, if I'm wrong, I was wrong and I'm out of here. Okay. So how far do you choose your expiration? Usually just a week to 2 weeks, my trade. Okay. So there we go. If you already moved your original premium in February from your first put as income from your account, and in March you sell more puts, how would your cost basis change then? Well, just because I'm moving money out of the account doesn't change it, because I still have the stock in there, right? So, I mean, I can wire money in and out of my account, and this does not affect the stocks that I currently own. So therefore, it's not that I wired stocks out of my account, Jim. Making sense? So it doesn't affect it at all. Okay, good. So let's see. In your experience, how many times have you had to rescue a mission for a single stock? Twice. Twice thus far. So here, still nothing, because again, I want the stock to see it dropping at least 30% before I consider flying a rescue mission. Okay. So Steven says, what if you do the 11 strike price and get the premium but don't get assigned? Great. You're lowering your cost basis. You just keep lowering your cost basis and you collect the premium, and then you do it again and again and again. Okay. So easy enough. Easy enough. Okay. Good. Technical faking done by YouTube gurus usually, or just citing privacy concerns. You see, I know what you're saying about showing the account and privacy concerns. Here's the cool thing. You see, all of the brokerages have a so-called privacy. You see that my account number ends in 13, but the rest is hidden. So my name and the account number is hidden, and that's super easy to do. It's just a matter of selecting the privacy. So I think it's a lame excuse. But I want to be absolutely honest. This morning I did have problems with Tastyworks. Anybody else? This morning, slightly after the open, Tastyworks, and this is Tastyworks, not me, had massive problems here. So it can happen. It can happen. But often these technical problems are something else. Okay. Good. Let's see. What else? What about selling a put that is already underwater to collect a higher premium, meaning already below the strike price? Don't go too crazy. Again, don't go too crazy. The way how I like to trade the wheel strategy is in a super conservative way, right? And I think this is super important. That you don't get too greedy, that you take it, do it in the conservative way. So, I mean, don't get too creative. It's up to you, of course. If you are an experienced trader and you've done it before, I wouldn't do it. Okay. Good. So, Leonel says on the WKHS stock, it was an up and down day today. Sold my 2650, only gives me... Well, if this is 59%... annualized on the buying power, you're good here. Very good. Sam says, why not sell the calls anyways in addition to the extra puts? Because I don't get enough premium on the calls. So I think it's really important because it's a great question, but you see this where I think I mentioned it somewhere here. Yeah, I want to make at least 30% annualized. And this is for both calls and puts. And so here... if I can sell the calls, as long as I can sell the calls, I would do that. So I would not go too creative. But again, if you're an experienced trader, do whatever you want. You're an adult, right? You can do whatever you want. I wouldn't. So because the reason why I'm selling puts is only if I don't get enough premium for the calls. Okay. James says selling more puts takes on more risk. Absolute valid point. Sometimes stocks don't come back. Yeah, it helps if it's a good stock and one you wanted to own in the first place. And this is where we go back to the stocks. Let me just show you the stocks that I do own, right? I mean, it's Ride. So I do like Ride and the story here. So even though today it's down. But you see this, let me see. How can I reset the chart here really quick? There we go. Right. I mean, I'm okay because it can go down to 12 to 13. I believe that Ride is delivering trucks at some point this year. They're expected to do this electric trucks in the third quarter. So I like them. I do like Apple. I mean, I mentioned it to my mastermind members this morning. I just this weekend spent $1,700 on Apple products. I think almost $1,800. I bought a new iPad Pro, a new pencil, and a keyboard, and boom, there's $1,800. So I think that Apple overall is a good company. GDXJ, I believe in the gold miners, so I think that the gold miners will be fine. And then Snap, I do believe that also Snap will be fine. I mean, today, yeah, it's going down, has been going down, but I think that there's some good support, so I wouldn't mind owning Snap here. Okay. Good. So there's another great question. Rupinder says 30% from the assigned price or break even. I go with the assigned price. So, but great question here. Okay. Good. Okay. So I saw that on Friday when I did the previous Coffee with Markus and today that there's way more questions coming in that I haven't answered yet. So here's what I decided to do. I'm capturing all of the questions. My team captures all of the questions. So on Wednesday, we will do a dedicated show and I will pick the questions that are being asked most frequently. So make sure that you're subscribing to the channel and hit the little notification bell because this way you get notified whenever I go live. And so on Wednesday, I will answer the most frequently asked questions around the wheel. So If I haven't gotten to your question, don't worry, they are being captured. So I'll combine all of the questions here, and we'll answer them on Wednesday. Anyhow, so good hanging out with you today on a crazy day like this. I mean, are you enjoying this show? Is this helpful at all? If it is, do me a favor and click on like, and also share this video with others. I mean, you saw somebody joined us from Australia after a friend has shared it, and now I think it was she or he, is loving it, right? So share it with your friends. If you enjoy the show, they might enjoy it as well, and they might thank you, I hope. Anyhow, okay, have a great rest of your day, and make sure that you do follow your plan. If you need a mug like this, we have it in the store. I believe it's $9 or $9.50 for the mug. I'm making 32 cents on this, so it's not a revenue maker, but it might be a good reminder for you to have this on your desk. You see, it's facing me all the day, and we have it for left-handed and right-handed. Anyhow, I'm rambling. I'm out. Have a great rest of your day. Take care.